Hello everyone and a very good morning. Welcome to the third session of Indirect Taxes GST, part of Paper 4 Taxation of the intermediate course. Friends, yesterday we have concluded our discussion on supply under GST, charge of GST, time of supply, valuation, as well as input tax credit. Today, we are going to cover registration, documents, payment of tax, as well as we will try to cover up returns under GST. So, commencing our discussion, registration under GST is a fundamental liability, and registration under GST is an important factor because the liability to pay tax, the eligibility to avail input tax credit, and registration, all three go hand in hand. Like we had studied yesterday, that unless only a registered person can avail input tax credit, so if any person is not registered, then he cannot avail input tax credit. Second of all, once you obtain registration under GST, then it becomes mandatory for any taxpayer to charge the applicable GST and to deposit it with the government. Now, one thing that I would like to make clear here itself is that a lot of things that we discussed during the session, towards the end of the session, when I go to the query section, students start saying that please repeat, please repeat, please repeat. So I will not be repeating what I've already covered during the course. If any queries which have been discussed within the session, that I will not cover, so as to save everyone's time. So please pay attention, please listen carefully. Otherwise, there is no point that I keep it repeating again and again. Okay? So, registration under GST, basically, the registration under GST has been fixed basis the turnover of any taxpayer. So, the primary factor, the basic factor for obtaining registration under GST is dependent on the fact that what is the turnover of the taxpayer. If the turnover limit is crossed, then that taxpayer is required to obtain registration under GST. If the turnover limit is not crossed, then the person generally is not required to obtain registration under GST. Now, one difficult thing for all of you will be to learn this chart by heart, because for different states, different turnover limits have been prescribed. So, for supply of goods, in some states it is 20 lakh, in other states it is 40 lakh, in some states it is 10 lakh, and for supply of services or goods as well as services, it is 20 lakh or 10 lakh. Now here, the same principle as was applicable in the case of composition taxpayer, one intelligent question was asked by Tabassum, who's part of the audience. She had asked that what happens if in case of a composition taxpayer, a taxpayer has two locations, one in Delhi and one in special category state. So the default limit for composition scheme was 1.5 crores. But in special category states, this limit stood reduced to 75 lakhs. So we had all discussed and agreed that the lower limit will be applicable in that case because where an assessee has a location in normal state and as well as in a special category state, then the lower limit will be applicable. Similarly, suppose any person is dealing in supply of goods. He has a location in Delhi. So for Delhi, the turnover limit is 40 lakhs. But he also has a location in Tripura. In Tripura, the threshold limit is 10 lakh rupees. So the total threshold limit applicable for that assessee having a location in Delhi as well as Tripura, the threshold limit will be 10 lakh rupees only. Okay? So this could be a tricky question which can come to you in exam because this is a recent change wherein states wise different turnovers have been prescribed and they would want to trick you in a manner that they will say that the taxpayer has a location in Delhi, also has a location in Puducherry, also has a location in Tripura. Now what will be, and this the turnover is suppose 19 lakh, is the person required to obtain mandatory registration under section 22? So the answer will be yes. Why? Because if a person has a location in Delhi, Puducherry as well as Tripura, then the lowest threshold limit is 10 lakh rupees, and because the turnover in that case is 19 lakh rupees, the person of course will be required to obtain registration. Now this, my dear friends, this turnover limit is only relevant where the taxpayer is not covered under mandatory registration, under compulsory registration. And in what cases is the registration compulsory? The registration has been made compulsory in all these cases. So suppose for a taxpayer, the turnover may be only 2 lakh rupees. And if the turnover is 2 lakh rupees, it may come to your mind that he is nowhere required to obtain registration. But if he gets covered under either of these 12 cases, then even if his turnover is 2 lakh rupees, he would be required to obtain registration. So what are the clauses for registration? First is interstate taxable supply. So if any person is making an interstate taxable supply, in that case he is mandatorily required to obtain registration, specifically in case of goods. Second, casual taxable person making taxable supply. So if any casual taxable person, now what is a casual taxable person? Suppose there is a contractor who is based in Delhi. Now this contractor gets a contract in Jharkhand, in Ranchi, city of MS Dhoni. And he goes to Jharkhand to undertake that works contract. Now, because in GST we all know that under GST the registration is state-wise. That is, for every state where you have a location, you need to have a registration. So, because in our case, the contractor is usually based in Delhi, obviously he would have a registration in Delhi. But when he is going to any other state where he does not have a permanent place of business, in such states he will need to obtain registration as a casual taxable person. So, any casual taxable person, irrespective of his turnover, is required to obtain registration compulsorily. Then, person liable to pay tax under reverse charge, that is, Section 9 subsection 3 or Section 9 subsection 4. So, any person who gets covered under Section 9 subsection 3 is again compulsorily liable to obtain registration. And friends, one more thing let me tell you. Like I told you that even if the turnover is 2 lakh, 50,000, 10,000 or 1 rupee, but if he gets covered under any of the clause of compulsory registration, then irrespective of the turnover, the registration has to be obtained. And once the registration has been obtained under GST, then tax has to be charged on every transaction. For example, suppose there is Mr. X, his turnover is 1,50,000, but he becomes liable to pay tax under reverse charge, and therefore he obtains registration under GST. Now, once he obtains registration under GST, he needs to charge the applicable GST on every transaction post obtaining the registration under GST. That is, he cannot say that, okay, my turnover is only 1.5 lakh. I have only taken registration because it is compulsory, but I will not charge any tax till I achieve 20 lakh turnover or 40 lakh turnover. That is my threshold limit. No. Once you have obtained registration, you are liable to pay the applicable tax. Next is required to pay tax under Section 9 subsection 5. So under Section 9 subsection 5, it talks about e-commerce operators. Next is non-resident taxable person making taxable supply. So any non-resident taxable person who is making taxable supply. Now what is non-resident taxable person? Any person who does not have a PAN number in India. So basically, suppose the government is wanting to build bullet train between Mumbai to Ahmedabad. Now bullet train is something nobody in India has any experience, and for that the contract has been given to a Japanese entity. Now that Japanese entity comes into India, does not make any, so they do not form an entity in India. They simply remain in the foreign entity capacity, that is, they do not obtain PAN number in India. Now for such cases, they need to obtain registration under GST as a non-resident taxable person. And any non-resident taxable person is compulsorily required to obtain registration before making any taxable supply. Next is required to deduct tax under Section 51. So basically here we are talking about TDS under GST. Not this TDS is not the TDS which is deducted under income tax. That is separate. This TDS is the TDS which is liable to be deducted under GST, and primarily it is the government entities which are required to deduct tax under GST. Next is making taxable supply as an agent or otherwise. So, like I told you, remember we had discussed the case of Samsung and its or Sony and its C&F agent. So Samsung has a location in Haryana, C&F agent ensures delivery of goods and collection of payment, but the billing happens directly between Sony and the dealer. So that kind of agent again is compulsorily required to obtain registration. Input service distributor is someone, so basically big entities like Hindustan Unilever, Nestle, Airtel, Jio, all these companies have pan-India presence, but they have their corporate office in either Delhi, Haryana, Gurgaon or Mumbai, Maharashtra. So, all the common services such as marketing expenses, auditing fees, legal expenses, so EMCs, all of these are generally received at the corporate office. And this input service distributor is basically a registration which enables distribution of input tax credit in case of common services from the head offices to the branch offices. Every e-commerce operator required to collect tax at source. So, like in income tax, there is TCS. Similarly, TCS has also been introduced under GST, but this has limited applicability in case of e-commerce operators. So, any e-commerce operator is required to collect tax at source. Next is supplier of OIDAR services from outside India to a person in India other than registered person. So OIDAR is basically online information database access and retrieval services. Some of you will already start putting in the query section, please repeat what is OIDAR. Please once again explain in detail what is OIDAR. Some of you will seek to specialize right now what is OIDAR. So let me tell you, OIDAR is basically anything which is accessible through the internet and which requires constant internet access. So if you do not have constant internet access, you cannot work on it. So even you could say that if I were to give you a random example, a not very accurate example, even your PUBG that you play on your mobile, can you play PUBG if there is a if your internet connection is not functional? You cannot play PUBG, right? So similarly, any database and access retrieval, so it is generally referring to Google and everything. So when they are providing services into India, so they have been mandated to obtain registration in India. Next is person who supplies goods or services other than supplies specified under section 9, subsection 5 through such e-commerce operator who is required to collect TCS. So any person who is making supplies through e-commerce operator, he is also compulsorily required to obtain registration. And the last clause is the general clause that if the government wants, they can notify any other persons who will be liable to obtain registration. So we have discussed what is the basic threshold for obtaining registration in GST. We have discussed who are liable to compulsorily obtain registration under GST. Now, person not liable for registration under GST so the persons who are not liable to obtain registration under GST are persons engaged exclusively in supplying goods or services not liable to tax, or wholly exempt from tax, or an agriculturist, or any other specified category which may be notified by the government. Further, the persons exempted from obtaining registration are a person making only reverse charge supplies of goods or services, for example, advocates, for example, GTA service provider, Next, person making interstate supplies of taxable services not exceeding 20 lakh and rupees 10 lakh in case of special category states. So basically, there was one case we had discussed this, that if anyone is making interstate taxable supply, they are compulsorily liable to obtain registration. But here, a relaxation has been given to service providers because see, services are very easily can be provided across India, sitting from one location, and hence the threshold has been kept intact, that your threshold of 20 lakh and 10 lakh will remain intact even if the service provider is providing services interstate. Similarly, person engaged or casual taxable person making taxable supply of handicraft good, of specified handicraft good not exceeding 20 lakh or 10 lakh. So basically in handicraft goods, so handicraft goods is something which is dealing in heritage of India, and they are generally very small in size, and it's all about selling the craftsmanship of India. So these people, the government has given them an exception that even you can, because they go from state to state, they take participation in exhibitions, they set up stalls and there they sell their product. So the government has given them an exception from registration up to 20 lakh or 10 lakh. Similarly, job workers making interstate supply of services, they have also been exempted, and person making supplies of services through an e-commerce operator. So we had read that any person making supplies through e-commerce operator is covered under compulsory registration, but services have been exempted up to the basic threshold limit. Why? Because this new setup, if you have heard the name of Urban Clap, now Urban Clap is giving you services like haircut, your house cleaning, and all these kind of services wherein the amount involved is very low. So basically a representation by made these small service providers that see, we are providing very small services and our annual receipts hardly cross 10 lakh and 20 lakh, and you are asking us to obtain compulsory registration, which means we will have to file all returns, pay the tax. This is not fair and please grant us relief. The government heard them and hence they have now been exempted up to the basic threshold limit. How, where and by when to apply for registration? So person who becomes liable under section 22, that is by crossing the threshold, or under section 24, that is compulsory registration, then he is required to obtain registration in every state, union, territory, and the registration has to be obtained within 30 days from the date on which he becomes liable. A casual taxable person, whereas a casual taxable person and a non-resident taxable person, they have to obtain registration in every state, union, territory in which he is so liable, and the registration should be obtained 5 days prior to the commencement of business. Voluntary registration. So what if someone voluntarily wants to register? That is also allowed, but once registration has been obtained, then the person becomes liable to pay tax as a regular taxpayer. Also, to obtain registration under GST, PAN number is must. So if a person does not have a PAN number, he cannot obtain registration under GST. So the GST registration number is known as GSTIN. It is a 15-digit registration number. First 2 digits are state code, then comes the PAN number, then the entity code, and then the checksum. a relaxation has been given for obtaining registration under GST. So basically earlier who will obtain GST registration? Generally a businessman, a entity which is conducting business will obtain GST registration. Now under GST, the details which were required to be filled included details of the bank account number. And vis-a-vis, on the other hand, banks, when you approach them for opening a current account, banks were asking for the GST registration number before opening any current account. Now the challenge which was arising was that if you go to bank, they are asking GSTIN number, and if you go to obtain GST registration number, they are asking bank details. Now what to do? So an option has been given that a registered person has an option to give his bank account details after obtaining registration, that is within 45 days from the date of grant of registration or due date of furnishing of return, whichever is earlier. Next is special procedure for registration of casual taxable person and non-resident taxable person. For a casual taxable person, so this we have already discussed that what is a casual taxable person and a non-resident taxable person. Now, what is the procedure for granting registration in the case of a casual taxable person and non-resident taxable person? They have to apply for registration in advance and at least 5 days in advance before making any supply. Registration is granted to them only after they make advance deposit of the estimated tax liability. Registration is granted to them for the period specified in the registration application or 90 days from the effective date of registration, whichever is early. So basically, they have to apply for registration in advance at least 5 days before. Also, they have to deposit the estimated tax liability in advance. Also, the maximum period of registration is 90 days, plus one-time extension can be obtained of another 90 days, and beyond this, working is not allowed to these category of taxpayers. Next is amendment in registration. So, suppose someone obtains registration and there is any change in the particulars, then the law says that the changes have to be intimated within 15 days. If there is any amendment of core field of information, the proper officer may approve or reject. Core fields of businesses such as legal name of business, principal additional place of business, addition deletion of partner, director, managing committee, karta. Amendment in non-core fields. So when you are amending core fields, the proper officer will approve or reject. But if it is amendment in non-core fields, our registration will automatically get amended. And if for any reason there is a change in the PAN number of the taxpayer, then the taxpayer would have to obtain a fresh registration because if you're changing the PAN, then there is no amendment, rather it is a case of fresh registration. Cancellation or suspension of registration. So, cancellation can be done on making an application by the taxpayer. Suppose any person is discontinuing his business, of course he will apply for cancellation. And even the proper officer can suo motu proceed to cancel the registration of any taxpayer. So the reasons could be transfer of business or discontinuation of business, change in constitution of business, person no longer liable to be registered under section 22 or 24. So this could be one of the these could be some cases wherein cancellation of the registration shall become applicable. Herein, one thing which has been clarified is that, like yesterday we had discussed in our ITC discussion, that in case of merger, demerger, amalgamation, the ITC of the old business will stand transferred to the new business. Similarly, a clarification has been issued that if there is a taxpayer who is a sole proprietor and he passes away and his son is now taking over the business, or any other person in his family is taking over the business, then this will also be treated as transfer of ownership of business, and hence accordingly this will be treated as a case of transfer of ownership of business. Okay. So what is the procedure? What are the preconditions at the time of cancellation of registration? If any person is opting for cancellation of registration, then the input tax credit, whatever is there, input tax credit equivalent to ITC on inputs as well as capital goods needs to be paid back to the government. Why? Because in section 16 we had read that input tax credit is available only if the goods and or services are to be used in the course or furtherance of business. Now, once the registration is being discontinued, this means that you are no longer going to be continuing to pay tax under GST. Hence, automatically you would also be debarred from any input tax credit to the extent of the depreciated value of capital goods plus inputs held in stock or semi-finished goods or finished goods. Now, suppose the reversal which comes by this calculation is 5 lakh rupees, and if in a case person is closing down the business and he is selling all this stock and the tax payable on the sale value comes to 10 lakh rupees, then the government will obviously want the higher amount as tax, and hence the higher amount, that is 10 lakh rupees, will be payable and not just 5 lakh rupees. Capital goods, the depreciated value will be calculated as per 5% per quarter utilization, 5% per quarter amortization of the input tax credit. Suspension of registration. So friends, earlier a difficulty was being faced by taxpayers. Suppose a taxpayer wanted to opt for cancellation of registration, then he was filing the application online for cancellation, but no cancellation of GST registration is final until the proper officer does a complete detailed analysis as to why the person is obtaining for cancellation. Because let me tell you, generally the government's understanding is that we need to check what are the kinds of transactions that a person has done during the course of registration, whether he has paid the tax correctly, whether he has availed the due ITC, and only once the government is satisfied, then they grant a cancellation, because once cancellation is granted, then that person becomes free. Okay. So that is why, while the taxpayer was filing the application for cancellation, but the final cancellation was not being awarded because the application was to be reviewed by the tax officer. Now suppose someone applies for cancellation on 1st of May 2020 and till 31st December 2020 The cancellation certificate is granted on 1st of January 2021. Now the question was, what should the person do for the period May, June, July, August, September, October, November, December? Because the person has applied for cancellation, he is not doing any business, but the department is taking its own time and only awarding cancellation in January. So this is where an amendment was brought in and the status of suspension of registration was introduced. Suspension of registration says, as soon as a person files an application for cancellation of registration, it will be deemed that the registration of the person shall be deemed to be suspended, and suspension means that now the person is no longer required to file any return nor to pay any tax. So basically the assessee can sit quietly, nothing to be done, and of course when the department is satisfied and they issue a cancellation, then the final cancellation will be awarded. If for any reason the department is not satisfied and they do not award cancellation, then there will be a liability for this entire period. This again we had discussed yesterday. Person allowed to obtain multiple registration in a state irrespective of separate business verticals. So friends, with this we conclude our discussion pertaining to registration under GST. Now the next chapter is documents under GST. Before we move on to taking the next chapter, let me quickly see for 5 minutes what are the queries which have come till now, and then we will move on to the next chapter. Morning, Nikita. Okay, Anmol is saying, so what happens if person is having different kind of business in different states? Like in the first state he has a retail store, in other he do renting service, then what happens? So he can if he is in different states, then he can obtain different registration, no problem. Nikita is asking, is interstate taxable supply include both goods and services? So Nikita, this I have clarified. I hope you would have seen. Yes, Archana, interstate supply is only for goods up to threshold limit. Okay. Jogi Narendra is asking if RCM have 10,000 turnover, he is liable to pay tax only with No, this also Jogi Narendra I have clarified that once you obtain registration, you are liable to pay tax on all transactions. Adarsh is asking example for OADR, Amazon Prime, Netflix and other OTT platforms. Yeah, you can say that. Adarsh. Raghavendra, job worker means whom? So Raghavendra, job worker is basically these small time service providers. So like Maruti Suzuki, Tata Steel, they have a lot of small time vendors. So basically Maruti Suzuki cannot develop everything, right? For the car, what they do is they generally procure a lot of goods from other suppliers. Plus they also outsource some activity. So like what happens in our profession also, that suppose there is a big advocate, senior advocate, and someone comes to him and says, please file my return. So will he file the return? No. So he will outsource it to some chartered accountant that this is my client, please can you file the return for him? So job worker is a simple concept, meaning that outsourcing of some part of activity to another person, wherein the goods belong to another person and the service is being undertaken by another person. Yes, Anantamurthy is saying in case of fuel station, while petrol and diesel are outside GST, but because he is also dealing in lubricants, he will have to obtain registration under GST because aggregate turnover talks about taxable as well as exempt, and exempt includes non-taxable. PL Venkat Narasimhan is asking, is GST paid on RCM basis eligible for RTC? Yes, sir, 100%. Sushmita is asking, can a firm company have more than one PAN? How can one company have more than one PAN? They cannot have. Ali Namol Jose is asking, last time basic limit for goods were 40 lakhs. Whether the same is applicable this time? Yes, my dear friend. Meghjit Sain is asking, sir, e-commerce operators are exempt from registration under GST, but Amazon provides both goods and services. So will it be exempted from registration? My dear friend, e-commerce operators, why do you say e-commerce operators are exempt from registration? Where are e-commerce operators? What are you exactly referring to here? Aishwarya, I have circulated the PPT. I have sent the PPT to the Board of Studies. Now it is up to them how they will share it with you. And one more thing, let me put it on record for all of you. So this PPT is a best attempt to collate your entire updated course as per the Board of Studies guidelines. The PPTs are nothing less but a summary of your study material which has been given by Board of Studies. If there is a conflict between the PPT and your study material will prevail, your study material will prevail, your study material will prevail. And let me tell you, while I have tried my personal best to keep it as updated as it can, if for any reason, any update, any amendment has been missed, then the primary liability, my dear friend, is on you to refer the study material, refer the relevant amendment. Please don't say tomorrow that in the PPT, since it was not there, hence you could not learn that or you excluded that. So the primary liability to check that all the amendments and all the updated things are there is please refer to your study material plus the relevant amendments. So we'll be covering amendments separately, but still I am putting a word of caution so that you do not become relaxed. Oh, we have seen the PPT, we have gotten everything, now let us not worry about everything. So please, while we have tried to work very hard, but still let us not keep any scope for any error, okay? Mayank, I will not repeat what is an input service distributor. I had already cautioned there will be no repeating. Abhishek is asking, after 6 months of opening a business by an unregistered dealer, then business sale exceeds threshold limit and registered, then he will be eligible for ITC on goods purchased before registration. No, Abhishek. See how it works is, Abhishek is asking, suppose on 1st of May someone opens a new business and he achieves the turnover of 40 lakhs somewhere in January 2021. So his question is, will he become eligible for purchases made between May 20 and January 21? No, he will only become eligible for purchases made January 21 onwards. This we had discussed yesterday, where a person becomes liable to obtain registration and applies for registration within 30 days, he will be eligible to avail input tax credit on input lying in stock as on the date he becomes liable. If a person is obtaining voluntary registration, then he will be eligible to avail the input tax credit of stock as on the date on which registration is granted. So please connect these dots and then analyze. Veeralakshmi, yes, amendments are very, 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 very important because, see, why I say very important? Because whenever your question paper is being drafted, suppose I give you the responsibility to draft any question paper. What will be your basic approach? Your basic approach will be, what new can I ask the student? What is recent that I can ask the student? And that is why generally in taxation papers, a good amount of questions are asked from amendments because they are recent, they are new, and the question paper setter also wants to draft something new, some new questions. Okay? Ankush Goyal, interstate and intrastate, there are no two separate limits there. That the limit of 20 lakh is one and the same. Okay? Jogi Narendra, no credit is available for personal consumables whatsoever. Yes, Abhinandan, it is the first monthly return. Divya, economic commerce, if it has been mentioned, it's a drafting error. It's e-commerce, electronic commerce. Nishtha, it's optional for an assessee that if he has different lines of businesses, he can obtain separate registration. If he does not want, he can continue on same registration also. Nikita from Rajasthan is asking, in case of cancellation of registration, they have to reverse ITC. But in case of cancellation due to less than threshold, when the business is being continued, see Nikita, ITC, so when you are obtaining for cancellation of registration under GST, what will you do of ITC if you are obtaining a cancellation of registration from GST? What will be the use of ITC? There will be absolutely no use, and that is why once you are, even if you are continuing the business, but if you are obtaining a cancellation of registration under GST, then of course you have to reverse the entire input tax credit. In the discussion, I had mentioned the cancellation of business because generally I had taken a presumption that generally someone is applying for cancellation because he is discontinuing the business. Okay, so let us move back to our session, please. Okay. So now what are the documents under GST? And basically from your queries, one general understanding that I get, and I am absolutely not wanting to put down anyone, I am not putting down your morale, but I believe taking benefit of this lockdown, I think most of these students are those who are first time studying this GST and they do not have their attempt in the May session, in the upcoming exams. That is what my understanding is, looking at the kind of queries that I am seeing. And if that is the case, let me tell you, you are being unreasonable with the people who have their upcoming attempt, who have already studied this once or twice. Because when I'm answering such simple queries, they must be getting a feeling that why is the time being invested in such basic things. So, I don't know what is the hurry, but if you have not studied it and if your attempt is not in the upcoming session, then first, always suggestible that you should have gone for the regular batch and then come for LRC. Because it has no meaning. You're unnecessarily asking anything and everything. So please repeat. So what is basic this? What is basic that? But this is neither do we have the time, nor is this the right forum. So I would request you that if you do not have the upcoming attempt, please don't, because some queries are being sacrificed and maybe there would be the people who have the upcoming attempt. So don't try to understand it completely through live revisionary classes. There is a reason this is named as revisionary class. Okay, only 4 sessions. Now don't underestimate that entire GST can be covered within 4 sessions. Had it been that simple, nobody would have failed in ICAI exams. We would have a 100% result. Okay. So, particulars of tax invoice. So, what are the documents under GST? The most important and the most basic document is tax invoice, which is to be issued by any taxpayer for charging any tax. And on the other hand, it is also the relevant document for the recipient to avail the input tax credit. Now, please remember, government does not give any format that you have your tax invoice should look like this. It should be issued vertically, not horizontally, nothing like that. All that the government does is, it provides that these details should be mentioned on the document in any order. And once these details are captured in a document, that document will be termed as tax invoice. Now, as we go on to discuss multiple documents, you will see that they would have fewer requirements, but basically similar kind of requirements. So, to save the time, I will discuss these requirements in detail in case of tax invoice. In case of other documents, I will simply show you the slide and mention that these details are required. I will not discuss them item wise. So the particulars required to be mentioned on a tax invoice are prescribed by Rule 46. First, it says that name, address and GSTIN of the supplier should be mentioned. Next, a consecutive serial number not exceeding 16 characters in one or multiple series containing alphabets or numerals or special characters, that is hyphen and dash. What is hyphen and dash? This is the dash, or this is the slash. So hyphen you can say or dash you can say to this, and this is the slash. Only these two kind of special characters can be used, and the maximum size of the consecutive serial number is 16 characters. Now, the idea behind this unique serial number is that first the government wants it to be unique for a financial year. So suppose I am a chartered accountant and I have my firm wherein I practice. So a reasonable way for me to raise my invoices would be first to put a reference of the financial year, that is 2020-21. So I have used 5 characters 20-21. Then I give a slash. Then I may use initials of my firm, SKG, okay, referring my firm, then slash, then invoice number 001, then next 002, 003, 004. So the government wants you to move in a sequential manner. Why? Because when you move in a sequential manner, the government can then any day come back and see that how many invoices have you raised in a financial year, and basis that invoice, the government can then take an estimation that whether you've correctly paid the tax or not. Next detail required is the date of issuance of invoice. Next, if recipient is registered, that is, if I am providing services to a registered recipient, I need to mention name, address and GSTIN or unique identification number of the recipient. If the recipient is unregistered, then I have to, and if the value of supply is INR 50,000 or more, then I have to mention name, address of recipient, delivery address along with name of state and its code. So every state has been given a code, like UP has 09. If the value of supply is lower than 50,000, so then the details of the recipient are not mandatory, but if the recipient requires, then such details may be mentioned on the tax invoice. Then the HSN, which is the Harmonized System of Nomenclature, HSN code for goods, and if these are services, then the SSE code. Next is description of goods or services, quantity in case of goods, total value of supply of goods or services or both, taxable value of supply of goods or services or both, rate of tax, amount of tax, place of supply, address of delivery, and whether the tax is payable on reverse charge, and signature or digital signature of the supplier or his authorized representative. So these 16 different details are required to be captured in any document for it to qualify as a valid tax invoice. Now this HSN SSE code, yesterday I had told you that it is a 8-digit special number which is unique to every product, every service. If the turnover of the SSE is up to 1.5 crores, then no HSN is required to be mentioned. If the turnover is between 1.5 crores and 5 crores, then first 2 digits of HSN are required to be mentioned. If the turnover is above 5 crores, then 4 digits of HSN is required to be mentioned. How many copies of invoice is required to be issued? In case of goods, the invoice is required to be issued in triplicate. Why triplicate? Because original will be for recipient, duplicate will be for transporter, and triplicate will be for the supplier. In case of services, original will be for recipient and duplicate will be for supplier. The serial number of invoices issued during a tax period shall be furnished electronically through common portal in GSTR 1. So this consecutive serial number of invoices that you need to report periodically in your GSTR 1 return. If any invoice or debit note is issued in pursuance of section 74, 129 and 130. What are these sections? These sections are basically, they talk about recovery of tax in case of tax evasion, that is demand and recovery. In these cases, if an invoice is issued, the words input tax credit not admissible has to be mentioned on the face of the invoice. So this is all about tax invoice. Now, talking about revised tax invoice. So a revised tax invoice, generally a tax invoice cannot be revised. Generally a tax invoice cannot be revised. Generally a tax invoice can never be revised. It is only in one situation that a revised tax invoice can be issued, and that case is where the person applies for registration within 30 days of becoming liable. Suppose someone commenced business on 1st of May 2020. He becomes liable to obtain registration on 1st December 2020. He applies for registration on 15th December 2020, that is within 30 days of becoming liable. and he is granted the registration on 1st of January 2021. So for the period 1st of December, that is the date on which he became liable to obtain registration, to the date when registration was granted, that is 1st of January 2021, for this period, he can issue a revised tax invoice. Why? Because the law says once a person becomes liable to obtain registration, he will take some time to apply for registration. Let us give him 30 days. If he applies within 30 days, we will take some time to give him the registration. Until unless he has a GST registration, he cannot charge the tax from his recipients, and therefore for this period, that is between the date he becomes liable to the date the registration is granted, for this period he can subsequently issue a tax invoice, collect the tax from the recipient, and the recipient can then avail input tax credit basis this tax invoice. And the details required to be mentioned on the revised tax invoice, they are all self-explanatory, except one special thing is that word revised invoice are to be mentioned prominently. Now, what are the cases where tax invoice is not required to be issued? A registered person may not issue a tax invoice if the value of goods or services or both supplied is lower than 200. So, if you go to buy to your grocery shop in your area, if you're buying a soap, if you're buying a shampoo, if you're buying a bag of chips, wafers, if you're buying a pack of biscuits, does every time he issue you an invoice? No. So basically the law says, because see, below 200 rupees, they are very nominal value transactions. So no requirement to, we are allowing you not to issue invoice for every transaction. Not saying that you don't issue an invoice at all. No, they are saying no requirement to issue invoice for every transaction. Plus the recipient is unregistered. So when you are buying that pack of chips, when you are buying that chocolate, are you a registered entity? You are unregistered. And the recipient does not require. Do you require an invoice every time? That no, I have bought a chocolate from you for 20 rupees, give me the tax invoice. I am CA student. I will report you, mister, if you don't issue the invoice to me. So, if these three conditions are complied, value is lower than 200, recipient is unregistered, and the recipient does not require such invoice, then the taxpayer has an option to issue a consolidated tax invoice at the end of the day in respect of all such supplies. And the same provision is also applicable in case of bill of supply. However, there is an amendment. So, before this COVID lockdown, of course, all of you must be famously going to cinema halls, multiplexes to watch movies. Now, usually, the movie tickets are below 200 rupees in value. Now, they started taking a position that we will, because it says below 200 and our case is below 200 only, we will also not issue anything. We will simply issue a small ticket, and at the end of the day, we will issue a consolidated tax invoice. Law said no. For you cinema, multiplex screens and for you cinema halls, this relaxation will not be applicable, and hence you will be required to issue a proper tax invoice even in cases where the value is lower than INR 200. Now, bill of supply. So what is bill of supply? Bill of supply is applicable in two cases. One, if you are dealing in exempted goods or services. So if you are dealing in exempted goods or services, since there will be no tax, of course there will be no tax invoice, and hence a bill of supply will be required to be issued. Or if a person is paying tax under composition levy. So if a person is paying tax under composition levy, again, no tax invoice to be issued, only a bill of supply is required to be issued. These are the details which are required to be mentioned on a bill of supply. They are all self-explanatory. If a person is supplying taxable as well as exempted goods to an unregistered person, in such case they can issue invoice cum bill of supply. So basically they can issue a single document wherein they can mention it to be invoice cum bill of supply. They can charge tax on the taxable component and no tax on the exempt goods. Next is receipt voucher. Receipt voucher is required to be issued in cases where an advance is received against supply. So, if for any supply, any advance is being received, then the recipient is required to issue a receipt voucher. Herein, two more things are important. One is that if at the time of receipt of advance, if there is any confusion or if it is not clear that what will be the rate of tax payable on the supply. So suppose someone says that here is 1 lakh rupees in advance, Shashankji, please keep it with you, and what I will do is in future if I require any services, you can set off this amount against those services. Now today I do not know whether those services will be exempt, taxable, liable to tax at 12% or 18%. So the law says, in such case what you do is, simply pay tax at the rate of 18%. So even if they are exempt, even if they are taxable at 28%, lower or higher, whatever, pay tax at the rate of 18%. If the nature of supply is not determinable, then in such case, the supply shall be treated as an interstate supply, that is, from one state to another. So, if you are not clear whether to pay CGST, SGST or IGST, the law says go for IGST. These are the details which are required to be captured on a receipt voucher. They are all self-explanatory. Now the refund voucher. Suppose someone paid an advance and before the supply could take place, the person who had given such advance claims a refund of such advance. That someone suppose gave me 1 lakh rupees in advance and there was no requirement of provision of any service, and hence the amount of 1 lakh rupees was refunded to such recipient. So at the time of refund of such amount, a refund voucher is required to be issued by the supplier. And these are the details to be captured on the refund voucher. So payment voucher. Now payment voucher. So we have discussed receipt voucher when you receive any advance, refund voucher when you refund the advance. Now payment voucher is required to be issued when any payment is being made to any supplier against supplies which are covered under reverse charge. So for any supplies which are covered under reverse charge, the recipient is required to issue a payment voucher. Not only payment voucher, if the supplies which are covered under reverse charge are being received from an unregistered supplier, then in such case, it is the recipient who will issue the invoice also. That will be known as self-tax invoice. So what the law is saying, in case of reverse charge mechanism, the liability to pay tax is on the recipient, plus when he is making the payment to such supplier, there is a liability to issue a payment voucher, plus if the supplier is unregistered, then the recipient is also liable to issue a self-tax invoice. And these are the details to be captured in the payment voucher. Document in place of tax invoice. So, herein the government can specify for special cases wherein a detailed elaborate tax invoice may not be required and any other document in place of tax invoice would be considered as tax invoice. And the cases which have been notified here are insurance, banking company, financial institution, including non-banking financial company. So serial number and address of recipient has been made optional. What is mandatory is, other than these two details, all other details are to be mentioned. Plus signature, digital signature are not required. Plus a consolidated tax invoice or any other document may be issued at the end of the month. So these are special considerations given to insurer, banking company or financial institution. Similarly, for supplier of passenger transportation service like train, bus or plane, serial number and address of recipient have been made optional. Other information is mandatory. Here also signature, digital signature not required, and tax invoice shall include ticket. So basically the ticket that is issued will be considered as the tax invoice. Supplier of taxable service, that is registered person supplying services of exhibition of cinematography films in multiplex screens. So for these cases, electronic ticket will be treated as invoice. Details of recipient of service is being made optional, may or may not be mentioned. However, other details are required to be mentioned, and here also signature, digital signature are not required. In case of GTA, supplying services in relation to transportation of goods by road in a goods carriage, here they shall issue a tax invoice or any other document in lieu thereof, but the following details should be captured, that is, gross weight of the consignment, name of the consignor and the consignee, registration number of the vehicle, details of goods transported, details of place of origin and destination, GSTIN of the person liable for paying tax, and other information as prescribed for a tax invoice under Rule 46. So, these all details have been mentioned to be required in case of a GTA. Now, another important document, delivery challan. Now, in case of a delivery challan, now when can a delivery challan be issued? A delivery challan is required to be issued under either of these four category cases. That is, first is supply of liquid gas, where the quantity at the time of removal is not known, or transportation of goods for job work, if someone is sending goods for job work, transportation of goods for reason other than by way of supply. That is, if any Schedule 3 transaction is taking place, if any non-taxable transaction is taking place, then a delivery challan has to be issued, and such other supplies as may be notified. So basically, three places where delivery challan will become relevant is transportation of goods other than by way of supply, transportation of goods for job work, and supply of liquid gas. Details to be mentioned in delivery challan are as follows. They are all self-explanatory. How many copies of delivery challan are required to be issued? Generally, if delivery challan is being issued in case of supply of goods, then it has to be issued in triplicate, original for consignee, triplicate for transporter, and triplicate for the consigner. Where goods are being transported on a delivery challan in lieu of invoice, the same shall be declared in e-way bill. What is e-way bill? We will discuss in detail, don't worry about that. Where the goods being transported are for the purpose of supply to the recipient, but the tax invoice could not be issued at the time of removal, the supplier shall issue a tax invoice after delivery of goods. So this is something which has also been clarified. So what would be the cases where transportation of goods can be done without issuance of invoice? When goods are being transported in a semi-knockdown or completely knockdown condition. Now friends, some goods, it is impossible to transfer them as it is. For example, lifts which are installed in a high-rise building, is the lift taken as it is and installed? No. It is broken down. So panels will be taken, trolley will be taken, mechanism will be taken, buttons will be taken. So that is known as something as semi-knockdown. Completely knockdown is when you're taking it down in bits and pieces, like Lego. So if you know what is Lego, Lego are small blocks, right? And you can make anything from Lego. So just like that, think about these big transformers which are used for connecting the wires supplying electricity. Can they be transported like this? No. They are taken down, dismantled and transported in dismantled form. Then they are put together at the site and installed. And this will also be applicable in cases of supply in batches, right? I had given you an example that Maruti is supplying 100 cars to its dealers. For 100 cars, it has every right to issue a single tax invoice. But can 100 cars move in a single container? No. Maximum 10-15 cars. So at least there will be 7-10 different containers. Now how will the movement happen? So this is where Rule 55 helps us. Rule 55 says, supplier to issue complete invoice before dispatch of first consignment. So before you dispatch your first consignment, issue your tax invoice. Thereafter, issue a delivery challan for each of the subsequent consignments, giving reference of the invoice. Give reference of the invoice that, okay, Maruti will say that I've issued this invoice for 100 cars and they are being transported in 10 separate this thing. So it will issue 10 delivery challans, and in every delivery challan, it will give reference of the invoice. Each consignment shall be accompanied by copies of the corresponding delivery challan along with a duly certified copy of the invoice. So, with every truck, there will be a copy of original delivery challan along with a duly certified copy of the invoice, and the original copy of the invoice shall be sent along with the last consignment. In this case, when will the dealer be able to avail the credit of tax paid on 100 cars? On the receipt of the first batch or on the receipt of the last batch? What had we discussed yesterday? On the receipt of the last batch. Now, there is a clarification which has been issued. That is, goods which are taken for supply and approval basis. So friends, what happens in case of aerated beverages, this Pepsi, Coke, and you would have noticed if you've been to some shop that this not only Coke, Pepsi, even in case of bakery products, breads. So generally what happens is a tempo arrives in the morning, Vias, and even in case of milk products. And they ask, how many packets of bread do you require? How many packets of milk do you require? Some days he says, give me 10 packets. Some days he give me 20 packets. Some days he says, yesterday's stock is lying unsold, so I will not take any new stock. So every day there is a fluctuation in demand. But the business scenario is such that every day early in the morning, these tempos are filled with goods and sent across locations for distribution of these goods. Now, can Mother Dairy, Amul, Britannia issue a tax invoice at the time when the tempo is moving out? No, because maybe half a tempo may come back, nothing may come back, or the entire tempo may come back. They don't know. So here, this clarification helps us. It says, goods which are taken for supply and approval basis can be moved from the place of business of the registered supplier to another place within the same state or to a place outside the state on a delivery challan plus e-way bill, and invoice may be issued at the time of delivery of goods. Person carrying the goods for such supply can carry the invoice book. How convenient. So Britannia, Amul will clear the lorry in the morning, issue a delivery challan and e-way bill for the entire goods contained in that lorry. There will be a person sitting in that lorry along with an invoice book. He will go shop to shop, ask what is the requirement, deliver the goods to them there and then, and issue an invoice there and then. Next is debit note and credit notes. Let us first understand, when is a debit note required to be issued? If the taxable value or tax in one or more tax invoices is lower than the amount payable. So suppose I had to raise an invoice for 1 lakh rupees and due to some typographical error, the invoice only got raised for 10,000 rupees. So accordingly, tax would have been charged on 10,000 rupees. And thereafter I realize a mistake. So what should I do for the balance 90,000? Should I issue another tax invoice? No. The correct way is, because it is the same supply, no new supply has happened. So the correct way is to issue a debit note for the balance value along with the differential tax and raise it on the recipient. What happens vice versa? Suppose the invoice was to be for 10,000 rupees, but it got raised for 1 lakh rupees. Now the other person will say, what is this? You've raised an invoice for 1 lakh, it was to be only for 10,000 rupees. Now what should I do? Can I issue a revised tax invoice? No! Revised tax invoice is only allowed in case where the person has obtained fresh registration for supplies made between the date he became liable to the date when registration was granted. In any other case, no revised tax invoice can be issued, and tax invoice once issued cannot be cancelled. Which means I will then have to issue a credit note for 90,000 rupees along with the tax adjustment for the differential tax amount, and the other person will accept that, reverse the proportionate ITC, and then I can claim a adjustment of that tax amount. Other cases where credit note can be issued is where the goods are returned by the recipient or the supply is found to be deficient. Here, one thing which is important is that a debit note can be issued anytime. So today I can issue debit note for an invoice pertaining to 1718. But a credit note can only be issued can only be issued for up to for due date of filing of return for the month of September or the date of filing of relevant annual return. So for financial year 2021, the last date of issuing the credit note would be October 20. That would be actually the return of September. So the transaction has to happen in the month of September, or you can only report it by October 20th. So that is the last date. But in case of a debit note, the last date to issue debit note, there is no last date. So for 2021, you can even issue a debit note in 3031. Okay, even after 10 years, you can present debit note. Friends, here we will take a quick break of 10 minutes, and thereafter 10 minutes, we will resume our session.
Okay, sir.
So, welcome back to the session. Some amendments which have been recently done in documents. So, earlier, only one debit note or credit note could be against one invoice, only one credit note could be issued. So, basically, for every invoice, so suppose I am making supplies to Hindustan Unilever. I have made 10 supplies to Hindustan Unilever. I would have raised 10 invoices to Hindustan Unilever. And now, against those 10 invoices, I have to raise a debit note. So earlier, for every invoice, a separate debit note had to be issued. Similarly, for every invoice, a separate credit note had to be issued. But now, a single debit note can be issued for multiple invoices, and similarly, a single credit note can be issued for multiple invoices. So these amendments, when I mentioned, they are not you may not necessarily see them as amendments for your course. For your course, it may be a part of your regular course. But the reason they are coming here as amendment is because since GST has been introduced, more or less, I've been teaching it to students. And for them, since we have been developing notes attempt on attempt, so usually I have left it this way intentionally because you may focus on what happened within last 6 months. But prior to that, there may be other recent changes which would have been a regular part of the course, and you may never know, okay, this was recent. So the idea is to highlight that this is not what initially how things were. This was actually a change which was recent but not very recent. Okay. Next is requirement of signature and digital signature. So this requirement has been done away in the case of an electronic tax invoice, electronic bill of supply, electronic consolidated tax invoice, in case of insurance, banking company, financial institution, and electronic ticket issued for passenger transportation service. E-way bill. Now friends, before we go on to discuss e-way bill, let us conceptually understand what is the requirement of e-way bill and what is the relevance of e-way bill. E-way bill is a document evidencing actual movement of goods from the location of the supplier to the location of the recipient. Remember, I had given you an example yesterday that there was a menace of fake invoicing, fake transfer of credits, wherein suppose someone had a credit of 10 crores available with him in Delhi. On the other hand, there was someone who had a 10 crore of tax liability in Kolkata. So they would transfer this credit to the Kolkata entity without any actual supply so that the credit can be immediately used and no taxes required to be paid in cash. Now, with the introduction of e-way bill, the important thing is that the exact details of movement of goods, that is, on which date the movement of goods started, which was the vehicle which carried the goods, and by when the goods were delivered to the recipient. So all these details are captured in the e-way bill, who was the transporter. And of course, e-way bill has only relevance for transportation of goods, has no relevance for services, because of course services are intangible in nature. So e-way bill looks like this. It has two parts, part A and part B. Part A consists of e-way bill number, e-way bill date, details of who is generated the e-way bill, then the validity, that is valid from, valid till, because every e-way bill has limited validity, then GSTIN of the supplier, place from which goods have been dispatched, GSTIN of the recipient, place of delivery where the goods will be delivered, document number, document date, value of goods, HSN code, and reason for transportation. Part B of the e-way bill consists of vehicle number, which is carrying the goods, and transport document number. So basically, part B only contains details about primarily about the vehicle which is undertaking transportation of goods. E-way bill is mandatory where the consignment value is more than INR 50,000 and if interstate transfer of goods is being done by principal to job worker or interstate transfer of handicraft goods by a person exempted from obtaining registration, in these two cases, e-way bill has to be generated even if the consignment value is lower than INR 50,000. So, part A of e-way bill, the information can be furnished by the registered person who is causing movements. It could also be furnished by the transporter or the courier agency. Part B, that is the vehicle details, that will be available with the transporter. So, part B details are to be filled by the person who is transporting the goods. Who can generate e-way bill? Registered consignor, consignee or the transporter, any one of these three can issue an e-way bill. In case of transportation of goods by railways, even then e-way bill is required. However, in case of railways, the transportation can begin without generation of e-way bill, but the goods will not be delivered unless e-way bill has been generated. And a complete e-way bill is only generated when both details in part A as well as part B, both the details are furnished. If someone says, I am consigning goods only worth 100 rupees and I want to issue an e-way bill. So, for consignment value less than 50,000, it is completely optional. That is, if a person wants, he can generate an e-way bill even in cases where the consignment value is below 50,000. Details of conveyance may not be furnished in part B. So when is the detail not required to be furnished in part B? In case of intrastate movement, intrastate meaning within the state, up to 50 kilometer, that too from place of business of consignor to place of business of transporter. So basically, in good planned cities, there is generally a transport nagar, and that transport nagar is the place where all the trucks are parked and no trucks are allowed in the interior city. Now imagine if the business is located in central Delhi, in Chandni Chowk, which is a very congested area, and from there goods are to be supplied to Kolkata. So from Chandni Chowk in Delhi, the goods will first be moved in a small rickshaw to the place of the transporter. There it will be loaded in the truck, and from there it will move through highways to Kolkata. So basically, for this portion of movement from the place of business to the place of transportation, and then there in Kolkata, from the location of the place of business of transporter to, say, suppose Bada Bazaar, Victoria Circle, Park Street, to that place in the interior city limits where the trucks are not allowed, again the goods will move in a rickshaw. So for these two movements, part A is required to be filled and it will be single e-waybill only, but details in part B are not required. What happens if goods are moving in a truck and that truck meets an accident and the goods are then unloaded and loaded in a new truck? So details in part B can be changed and updated. Can an e-waybill once generated be cancelled? So there is an option to cancel an e-waybill, but an e-waybill can only be cancelled within 24 hours from the time of generation. Thereafter, it cannot be cancelled. There is one more option, and that one more option is that the recipient can reject the e-waybill up to 72 hours from the time of generation. Consolidated e-waybill. So suppose I have to send some goods to Bangalore, but it's only one carton of goods. So will I hire an entire truck for one carton? No. I will hire a portion of the truck. And like me, there will be n number of other people who would be wanting to transport something or the other to Bangalore. And in these cases, generally, the truck will wait to get completely filled for all the consignments to Bangalore. And once it is entirely filled with multiple consignments, it will then commence its journey to Bangalore. Now, there is a single truck with multiple consignments. In such cases, a consolidated e-waybill, that is over and above the normal e-waybill, the normal e-waybill will be individual to the consignment. However, the transporter needs to generate a consolidated e-waybill which will just be a simple detail of as to how many consignments he is carrying and what is the respective e-waybill for that. But this is theoretical right now. This provision has not yet been made effective. Now, what is the validity period of an e-waybill? The validity period of an e-waybill up to, for normal consignments, it is 1 day for each 100 kilometers or part thereof. So suppose if I have to transport goods for 450 kilometers, then the validity that I will get for my e-waybill will be 5 days because it says 100 kilometer or part thereof. However, in case of multimodal shipment, in which at least one leg involves transport by ship or over-dimensional cargo, in such cases, so you would have seen these huge consignments, windmills being carried on a trawler truck, so it moves very slowly because of the security concerns and everything. Plus, in case of movement by rivers, ships move generally comparatively very slow as compared to trucks. Hence, in such cases, due to their special category, one-day validity for every 20 kilometers or part thereof. Suppose if the transportation cannot take place within this time period, can any extension be sought? Extension can be given by commissioner basis exceptional circumstances. Now, a question may arise in your mind. So, what if e-way bill is required to be issued? It's just a document. If earlier, if the idea was to plug fake invoicing, so earlier a document by the name of tax invoice was issued. Similarly, a document by the name of e-way bill will also be issued. What's the difficulty? My dear friend, the government is now becoming increasingly based on technology. And thus, technology has stepped here in also. So what they have done is, they have asked all the transporters to stick an RFID tag on their transportation vehicles. And what is an RFID tag? It is similar to the e-toll tag or the fast tag, which is now being made mandatory for payment of toll. It is similar to that. Now, what happens with this RFID reader on these vehicles is that at various places, the government has installed these RFID readers. Can you see these small readers? And like I've taken a picture of one installed by the UP government close to border. So if you see these readers, right? Now, if I'm saying, now what happens is, so this is the RFID reader, and as the vehicle will pass below this RFID reader, immediately the RFID reader will read that, okay, the vehicle passed through me on this particular date at this particular time. And automatically all the details are being logged in. So manual intervention not required to a great extent, and automatic logging of all the transactions. So if in the future I say, suppose after 2 years I say, the government has to check that Mr. Shashank, you had told us on 1st of May, you have sent a consignment from Delhi to Kolkata, and you are saying this was sent by this vehicle. This means that on the route from Delhi to Kolkata, the vehicle must have passed through these RFID gates, and hence there will be a time log in accordance with the e-way bill of the vehicle actually passing through those RFID gates. And hence, automatically, the sanctity of the transaction will be verified. Now, if the government wants to verify, stop any vehicle, check whether that is correct or not, that is another check which is available with the government. They can intercept any conveyance, verify the e-way bill number, verify the consignment along with the details mentioned in the e-way bill. And if they find out that the details are not proper, or there is some tax escapement that they sense, in such case, they can even go on to confiscate that consignment. One more thing, since every e-way bill has limited validity, and suppose if the consignment is stopped for inspection and verification, if the inspection and verification exceeds 30 minutes, then a right has been given to the transporter that he can upload the details of such inspection on the common portal. Because suppose if due to this inspection and verification he is unable to undertake transportation within the given time limit, then he can ask for an extension. And with this, friends, we have concluded our discussion with respect to documents under GST, and next chapter is payment of tax. Before we move on to payment of tax, let me quickly give 5 minutes for addressing your queries. Pramod Kumar Gupta ji from Mumbai is asking, sir, if we take in advance against future supply and paid GST on that, but after some time advance payer cancel to getting to supply, then what about GST paid? Pramod ji, I have explained you need to issue a refund voucher and you will refund the entire amount. The tax that you've paid, you can claim as a adjustment as tax paid in excess. Kapil, please wait for some time. We will do the entire RTP, don't worry. Sanjay Paul is asking, when a part of goods returned in December by purchaser, but sale invoice had issued at April, then can we issue credit note at December? Yes, you can, Sanjay, provided. So see what it says is that for any financial year, so 2021 means that you issued the invoice in April 20, goods are returned in December 20, so you can obviously issue credit note in December 20. But suppose if goods are sent, invoices issued in April 20 and goods are returned in December 21, then no credit note can be issued because nothing can be done. No credit note can be issued after September 21. Agrima Agarwal from Delhi is asking, sir, will interest be paid if debit note has been made deliberately decided by both parties? What do you mean by deliberately? So deliberately is something, if the department comes to notice, of course the department will challenge and they will create a demand for interest. Abhinandan from Delhi is asking, can a registered person issue tax invoice in place of bill of supply, making GST column? No, Abhinandan, there is no such choice available. Bill of supply is specific to exempt supplies and composition taxpayers. If it's a taxable supply, then a proper tax invoice has to be issued. No, Moli Tiwari, e-way bill is not a substitute for delivery challan. Delivery challan is a separate document. So for every supply of goods, if it is taxable, either there will be a tax invoice. If it is an exempt supply, there will be a bill of supply. If the goods are being transported for reason other than supply, then there will be a delivery challan. So either tax invoice, either bill of supply, or either delivery challan. But in all the three cases, e-way bill is an additional document which will always be there if the consignment value is more than 50,000. Rajesh ji from Jhansi is asking, is a petroleum product carrier transportation required to e-way bill? See, petroleum products are outside GST, hence no e-way bill required. Rather, good question, rather go back and look into your study material. There is a list of exemption wherein no e-way bill is required. Learn that by heart, and there you will find in what cases no e-way bill is required. Paras ji from Lucknow is asking, in case of e-way bill where part B is not required, but if in midway, can the officer, sir, if in midway the officer first of all will not seize if you are undertaking transportation from the place of business of the supplier to the place of business of the transporter, and if the location is within 50 kilometers, then you are absolutely correct in law, and hence no seizure can take place. If seizure is done, that will be incorrect in law. Vinod ji, I am sorry, but I will not repeat. Mohit Ranwal is asking, if goods are transported through roads, then e-way bill is used. What if through rail or by air, then what document is attached? So my dear friend, I told you, even in case of transportation by rail, e-way bill is required, and similarly domestic transaction transportation. So it does. So does the airplane, if there is a businessman located in Delhi, will the plane come on his terrace and directly take the goods and take to the terrace of the recipient? No, na. First of all, the goods will be loaded in a tempo. They will go to the airport. They will be loaded in the airplane. They will go to the destination airport, unloaded, again loaded in the tempo, then reach the premise, na. So, of course, e-way bill is required. Hari Krishan ji, sorry, I will not repeat. Kajal Agarwal is asking, composition dealer should not collect taxes from the consumers, but we pay maximum retail price of the goods, which include taxes. So indirectly we can say that they are collecting the taxes from the consumers. Dear Kajal, I am a composition dealer. I deal in two types of goods. One where MRP is required, one where MRP is not required. Okay. And I am covered under composition. Now your question is, when I am selling goods at MRP, MRP includes taxes. My dear friend, if I am dealing in non-MRP goods, can I not increase the value? Can I not say that, okay, I need to pay 1% as tax, so this open item sells for 50 rupees plus 1% tax that I have to pay, I will sell at 51 rupees or I will sell at 55 rupees, and if you have to take, otherwise don't take. I will sell for 55 rupees, I'll do a back-end calculation and pay the tax. Okay, so there is no difference there. Every right, you can sell the value, but you cannot charge the tax separately. Okay, so no difference between MRP or non-MRP. Bhumika is asking, in the case of stock transfer, is it required to issue e-way bill? Yes, madam. E-way bill is required. First of all, stock transfer is taxable, so of course e-way bill is required. And e-way bill is also required for any movement, whether taxable, non-taxable, unless it is specifically exempt. And what is exempt? That you need to go back and study. Hari Krishnan is asking, sir, please explain, no reduction in output tax liability of supplier shall be permitted if the incidence of tax and interest on supplier has been passed on to any other person. So, Hari Krishnan, there is a concept known as unjust enrichment. Unjust enrichment meaning GST is an indirect tax. Indirect tax meaning, so my services are chargeable to tax at the rate of 18%. Suppose for any reason, I charge tax at the rate of 28%. Who is actually bearing the burden of tax? The recipient is bearing the burden of tax. I am simply collecting the tax from him and depositing it with the government. Now tomorrow, I realize, oh, I paid 28% tax. But actually, I am only liable for 18% tax. I go to the government and say, I have paid you excess amount of tax. I have paid you excess amount of tax. The liability was only for 18%. I have paid you 28%. Give me this 10% back that I've paid you in excess. The government will say, my dear friend, did you pay this excess tax out of your pocket? I will say no. I collected it from my customer and paid to you. Then the government say, what should I give the refund to you for? Why should I give you any adjustment? You have collected it from the customer and then you have deposited. Now why are you worried? Of course, if you can prove that you have returned the excess tax to the recipient, then I will give you the adjustment. But unless you can do that, no adjustment will be available. Nishtha, I've already answered this. One branch to another branch is nothing other but stock transfer only. No time limit, Raghavendra, for getting cancellation certificate. So e-way bill, I am again telling you for exempt zero rated. For zero rated, yes, because zero rated is nothing else but export. And if you want to know where required, where not, go back and study exemption list for e-way bill. Sneha, I'm not going to answer because this was already covered. Akhil, I am not going to answer because this query was already done earlier. Unregistered to register, ITC can avail retrospectively. There is no provision in ITC which allows you retrospective input tax credit. Okay. Nithya from Chennai. Sir, can transporter make changes in e-way bill part A? No. Part A once filled, no amendment can be made. Okay. So, moving back to our session. Payment of tax. Now, in payment of tax, or rather payment of government dues under GST, what all types of dues are covered? For interstate supply, for intrastate supply, CGST and SGST is applicable. For interstate supply, IGST is applicable. Otherwise, interest, penalty, fees, wherever applicable, is liable to be paid. Now, someone was yesterday asking what is electronic credit ledger, cash ledger. So, there are 4 types of ledgers. Electronic cash ledger. So, 3 types of ledgers: electronic cash ledger, electronic liability ledger, electronic credit ledger. And this is nothing else, but you can say, like you open a savings bank account with the bank, you get a passbook, right? And in the passbook, there are details of all the deposits and all the debits that you've made from the bank account, right? So likewise, in the electronic cash ledger, there are details of all the cash that you have deposited and all that cash that you have adjusted against your liability, GST liability. In the electronic credit ledger, there are details of all the credit availed by any taxpayer and the utilization of that credit. And in the electronic liability ledger, there are details of all the liability created on an assessee, whether by himself or whether by the department, and the liability being paid off by such taxpayer. So, this is where you can see all the detail that I've mentioned to you. It's very simple, very user friendly. It's just that the government now has a place where it can, electronically maintain all these details cumulatively. Now, what will be the order of discharge of tax liability? This is another important aspect. Suppose in the month of May, I want to pay any tax to the government, but I have not paid tax since January 2020. and in the month of May, I am saying that I want to pay the tax liability for the month of April. January and February I will pay in the future. Can I do so? The rule says no. The rule says first you have to pay the self-assessed tax liability for the previous tax period. That is, first I will have to pay for January, then for February, then for March, and only then I can come to April. Second, once I have paid the self-assessed tax liability for previous tax period, then I have to pay the self-assessed tax liability for the current tax period. And thereafter, a taxpayer can pay any demand and recovery under section 73 or 74, any tax demand which would have been raised on the taxpayer, that he can pay under section 73 or section 74. For every transaction, for every debit or credit that you make to the electronic cash or credit ledger, or so a unique identification number will be generated, and this will also be generated for each credit to the electronic liability register. So this unique identity number basically acts as a reference point for you, the taxpayer, and the government to take note of any transaction which would have taken place. Interest on delayed payment of tax. 2 rates of interest have been prescribed under GST. If person pays the unpaid amount on his own, that is, he self-determines, self-assesses that there has been a delay in payment of tax, he needs to pay, the rate of interest shall be 18% per annum. However, in case where there has been an undue or excess claim of input tax credit or undue or excess reduction in output tax liability, in such case, the interest rate shall be at the rate of 24% per annum. So someone was asking, should the interest be computed from the invoice date or from the date of return? So here it is clearly mentioned, period of interest will be from the date following the due date of payment to the actual date of payment. So here we have completed our discussion with respect to payment of tax. I'll take queries for 5 minutes and then we'll again come back to our discussion on the regular course, that is chapter on returns. Rajesh from Jhansi is asking, farmer producer organization have their own vehicle and transport. Agriculture produce is exempted from e-way bill. I'm telling you, first go back and read this exemption list. Vinod, it is RFID and not RFIP. It is radio frequency identification device. Raghavendra, government will get all information about whether the vehicle had actually moved through that area or not. Okay. Raman is asking, there is a question in which CGST is first utilized with IGST and then CGST. Can you see this question? I am taking note of it. I cannot see it right away, but what I will do is I'll look into it through the day and I'll try and discuss it in the evening session. Okay, fine. Kulkarni Okay, Shashank is asking, sir, please can you tell the reason for the relaxation of tax invoice not given? So reason is, n number of reasons could be there. One reason could be that they may not end because it's something. So any person who's going to watch movie in the cinema hall, they could in the evening say that I only sold 50 tickets, whereas actually they could have sold 100 tickets. So to ensure there is no revenue leakage. Karthik, for the PPT, please follow up with the point of contact in Board of Studies. I've already shared it with the institute, with the Board of Studies. Charan is asking, sir, as we issue a consolidated credit note for more number of invoice, so in GSTR1 an option has now been given that you can report multiple invoices, okay? Moguloju Sai Sindhu from Telangana. Okay, so for the notes, basically these are PPTs. I have shared it with the team and you will get it in due time. Please follow up with the technical team, okay? Tabassum, please retype your query. Rahul, is GST payable before furnishing of returns? So Rahul, GST payment, actually how it takes place is that in the electronic liability register you create your liability and then you set off the liability from your available credits, and if it is short you pay the balance amount through your electronic cash ledger, which basically you end up filing the return, that is GSTR 3B. So Hari Krishnan, that is very simple, section 47, okay? We cannot cover 100% course in this revisionary class. Akhil is asking, preference of payment of interest. Okay, so payment of interest we have already discussed. Major heads and minor heads is nothing. Major head is IGST, CGST, SGST and UTGST, and minor head is basically there is a separate head for interest under CGST, separate head for interest under IGST, separate head for interest under UTGST. Similarly, there is separate head for penalty under SGST, separate head for penalty under UTGST, because the interest penalty proceeds will also accordingly go to the central government and the state government. Paras is asking, if car is being delivered, so yes, Paras, in this e-way will be required and e-way bill will be on the transaction value, okay? As the value has been there in the invoice. Himanshu is asking, is e-way bill required for rice? So I believe paddy and rice, agricultural produce is exempt from GST, okay? Good, so we've covered more or less all the queries. Coming back to our discussion on return. So, like I told you, initially government had made ambitious plans of 3 monthly returns, that is GSTR1, basis that 2A will be populated from 2A, 2 will be filed from 2, 1A will be populated and basis 1A, GSTR3 will be filed, okay. But of course, the system has not come into place as of yet. So today what we are doing is, as on date, we are working on the backup mechanism, which is filing of 2 returns, that is GSTR3B and GSTR1. GSTR1 is details of outward supplies. GSTR3B is details of monthly tax liability. GSTR3B is required to be filed monthly. GSTR1, depending on the size of the turnover of the taxpayer, if the turnover is up to INR 1.5 crore, then the GSTR1 is required to be filed quarterly. If the aggregate turnover is more than 1.5 crore, then it is required to be filed monthly. So this is where you can get what are the due dates. GSTR1 is required to be filed, I believe it's 11th and not 10th. Okay, so this is something that please check your study material and correct it. GSTR 3B, of course, is 20th of the next month. GSTR 4 is a quarterly return for the composition taxpayer, and here a relaxation has been given, which we will discuss, and this is required to be filed by 18th of the month succeeding the quarter. For non-resident taxpayer, GSTR 5 is the relevant return, and this is required to be filed by 20th of the month succeeding the tax period or within 7 days after expiry of registration, whichever is earlier. So suppose a non-resident taxpayer takes registration for only 15 days, then within 7 days from such 15 days, he needs to file return. If he takes for 90 days, then he needs to file monthly return by 20th of the next month. Annual return is to be filed by every taxpayer by 31st of December, other than input service distributor, TDS, TCS, casual taxable person, and non-resident taxpayer. Final return, as the name suggests, where the registration has been surrendered or cancelled within 3 months of date of cancellation or date of order of cancellation, whichever is later. So, who is required to file GSTR1? All registered person, including casual registered person, but what is not included, that is minus input service distributor, non-resident taxable person, composition taxpayer, tax deductor, and e-commerce operator. And these are the contents of GSTR1, that is the GST identification number, legal and trade name of the entity, aggregate turnover in previous year, tax period, HSNY summary of outward supplies, details of documents issued, advances received adjusted, B2B supplies, B2C supplies, zero rated and deemed exports, debit credit notes issued, nil rated exempted non-GST, amendments for prior period. Outward taxable supplies. So there is a distinction between what is required to be reported invoice wise and what details can be reported in a consolidated manner. If they are B2B supplies, that is from one GST registration to another GST registration, then if does not matter whether interstate or intrastate, invoice wise details have to be mentioned. However, if it is business to consumer supply within the state, only consolidated details required. If it is interstate, value is more than 2,50,000 in a single invoice, then such invoice wise details are required. If the invoice value is lower than 2,50,000, consolidated details to be uploaded state-wise. That is, from Delhi to Rajasthan separate, from Delhi to Maharashtra separate, from Delhi to Haryana separate. Now, if there has been any error in GSTR1, then revision of return, no return can be revised under GST. However, necessary correction can be done through amendment entries in the returns for subsequent months. So, मान लीजिए, if there is any error in the return for the month of April, you can undertake an amendment in the return for the month of May, June, or any month thereafter, but not later than September following the end of the financial year. How you can take that? You can take that amendment, undertake that amendment in table 9, 10 and 11 of GSTR1 of subsequent periods. So here also there is same restriction for any financial year. For example, for financial year 2021, the last date to take to undertake amendment will be by the date of filing return for the month of September or annual return, whichever is earlier. Second return, that is GSTR 3B, basic details, that is GSTI and legal name, tax period, that is the month for which the return is being filed. Other details, summarized details of outward supplies and inward supplies. supplies liable to reverse charge. That summarizes details of interstate supplies made to understate person, composition taxable person, and UIN holders, eligible input tax credit, values of supplies on which no tax is payable, that is exempt, nil rated, and non GST inward supplies, TDS and TCS credit. Next is furnishing of return under section 39 subsection 2, read with rule 62. It prescribes a special procedure for furnishing a return and payment of tax. That is, for persons paying tax under composition scheme, that is composition taxpayer. So here we had discussed that they are required to file GSTR4 quarterly, right? Now this has been relaxed, and now this GSTR4 has been made a annual return. No longer requirement of filing it quarterly. This has been made a annual return required to be filed by 30th April. So for financial year 2021, it has to be filed by the end of April 21. That is 30th April 2021. However, the tax payment is still quarterly, and for payment of tax, a simple statement is to be filed in CMP 08 by 18th day of the month succeeding such quarter. So, for April, May, June quarter, the tax has to be paid and CMP 08 to be filed by 18th of July. And of course, since a composition taxpayer cannot avail any input tax credit, the entire tax liability to be payable by a composition taxpayer has to be paid through electronic cash ledger only. Now what happens in case where a person is moving from regular taxpayer to composition scheme, or a composition taxpayer to regular, or from a composition scheme to regular taxpayer? In such cases, in the first part, where a person is moving from composition levy, from regular taxpayer to composition levy, he has to furnish statements relating to period prior to opting for composition levy. So, for the period, suppose, in financial year 2021, for 2 months, for April and May, he was under regular scheme, and now he wants to move to composition scheme. So basically, composition you can only avail at the beginning of the financial year. So suppose for financial year 2021 he is opting for the composition scheme. Then from 1st of April he will undertake compliances as composition taxpayer. However, for the period prior to that, that is up to 30th March 2020, he has to file all the regular returns, that is GSTR 3B, GSTR 1, and pay the applicable tax. And this has to be done till due date of furnishing the return for the month of September, or furnishing of annual return, whichever is earlier. So basically this should be done within time. However, the last date up to which it can be done is, of course, the due date of furnishing return for the month of September. If anyone is exiting the composition scheme, then statement in CMP 07, which is another form, till the 18th day of the month succeeding the quarter in which the date of withdrawal falls, that has to be filed, and GSTR 4 has to be furnished for the set period. So someone can come out of the composition scheme in the middle of the financial year. So suppose for 6 months he was under composition scheme, that is from April to September he was under composition scheme, and from October to March he is a regular taxpayer. So for April to September he has to file GSTR 4, and the last date will remain the same, that is 30th day of April 2021. Non-resident taxpayer, monthly return in GSTR 5, or if it is the registration is for a shorter period, then within 7 days from the last day of validity of period of registration, and any tax interest penalty or any other amount which is payable in addition to the tax liability paid in advance has to be paid by the date of filing return, and they are not required to file any annual return. Now, due date for payment of tax of every registered person is the last date of furnishing of return under GSTR 3B, 4 and 5 as the case may be. Non-registered taxable person or casual persons are required to make advance deposit of tax. GSTR 3B and GSTR 4 need to file even if there is no business activity, so nil return has to be filed. A registered person shall not be allowed to furnish a return for a tax period if the return for any of the previous tax periods has not been filed. Rectifications of errors, omissions. If registered person, after furnishing a return, discovers any omission or incorrect particulars in return, then he can rectify it in the subsequent returns. However, the last date for undertaking any rectification is by the due date of filing return for the month of September of the ensuing financial year, that is for financial year 2021. It is September 21, the due date October 20, or the furnishing of relevant annual return, whichever is earlier. Now, first return, annual return and final return. First return is filed by every registered taxpayer who has made outward supplies in the period between the date on which he becomes liable. So my example, he became liable on 1st of December, but he was given registration on 1st of January. So from 1st of December to 1st of January, he needs to file his first return. Annual return is filed in form GSTR 9. The normal due date is 31st of December of the ensuing financial year. So for financial year 2021, the last date will be 31st December 21. It is to be filed by everyone except input service distributor, casual taxable person, non-resident taxable person, or person paying TCS or TDS. Even composition taxpayers are required to furnish annual return in GSTR 9A, and along with it, for taxpayers having turnover more than 2 crores, they are required to get their accounts audited by a chartered accountant or a CMA, and that is filed in GSTR 9C. Final return, this we have already discussed, is filed post cancellation of registration. Annual return for financial year 17-18 and 18-19 has been made optional for small taxpayers whose aggregate turnover is less than INR 2 crores. So, if they want, they can file. If do not want, then whatever details, if they do not want to file, then it will automatically deemed to be filed. This I've already told you, reconciliation statement or GST audit. Every taxpayer whose turnover exceeds 2 crores is required to get his accounts audited by a chartered accountant. So someone was asking what is the late fee, penalty for return and everything. So you don't wait for the entire session. You just simply push on to ask, right? So here it is. If anyone fails to furnish his return as required, then a notice can be issued to them under section 46. Plus the late fee for non-filing of return, that is GSTR 1, GSTR 3B and final return, is INR 100 for every day of failure, subject to maximum of 5,000 rupees. And for annual return, Again, it is 100 rupees for every day to a maximum of 0.25% the turnover of registered person in the state or union territory. Now the entire focus will be on the amendments, and along with the amendments, we will be focusing on what are on the revision test papers and the practical questions. Now let me see, before anything else, let me address your queries. Tejas is asking, as now PMT. So Tejas is not in our course. Why do you want to discuss? Why do you want to confuse everyone? Raghavendra is saying, can I give the amendment notes separately? My dear friend, these are not private coaching classes. Okay, so some of you are saying, give your personal email ID, give your notes separately. This is not how it works. So, okay, we are on the institute's platform and we have to adhere to the guidelines. Okay. So let us stick to that. Compensation says, if it's not relevant for your course, why do you want to confuse everyone here? Manoj, yeah, again about compensation says, is it in a part of your course? Nitya, nobody has raised the complaint that PPT is blurred. I believe there is something wrong with your, please log in again or contact the technical team. Guna Sekar is asking, if we made payment of tax in CGST and SGST wrongly in major heads, instead to pay IGST, we need to pay again in correct head? Yes. Guna Sekar, if you've paid it wrongly, then you need to pay the correct tax liability, and whatever tax liability has been incorrectly paid, you can claim a refund for that or an adjustment for that. Plus, there is another procedure which has also been brought in, but I am not discussing that because that's a very recent amendment and maybe that's not a part relevant for your examination. So I don't want to discuss and confuse everyone. Sintuja, does August 19 edition of ICAI material contain all the amendments? I am not the correct person to ask that. Please ask, because these PPTs take into account your study material, updated study material as well as amendments. Okay. So please discuss from Board of Studies directly. Okay, Sneha, thank you for confirming. It is given 10th of the next month. So Abhinav, it's not correct to say that GSTR 4 is replaced by CMP 08. Simply, why do you want to add projections? Simply just keep in mind that in case of composition taxpayer, now you need to file CMP 08 quarterly and GSTR 4 annually. Okay. Mohit, this 22nd, 24 is a recent thing. Okay, depending on the location of the taxpayer. I believe it's not relevant from an examination perspective. We are not discussing it practically. Okay, we have to also keep in mind that people are here to discuss the course as relevant for their next attempt. Manoj, same query. I am not taking it here. So Tarun, if you receive goods in installment, so installment meaning that if for every installment of goods you are receiving a separate invoice, you can avail invoice on the receipt of that invoice and those portion of goods. If, however, there is one invoice for all the installments, then you can only avail credit on the receipt of last installment. Okay, Roshni, okay, it's 10th of the next month. Sandhya KB, sir, if I amended the GSTR 1 in which report, we can see. So, Sandhya, what happens is that when you do these amendments in GSTR 1, For the entire year, when you will be filing your annual return or reconciliation statement, it will be reflected there in aggregate. Okay. Yeah, okay. Darshan is asking, what about revocation of cancellation? So, suppose a registration is cancelled in GST and within 30 days of cancellation, so you are expecting that even in revisionary classes, there should be 100% coverage along with all the practical queries, and practical queries as they will come in exams, and we should cover the entire course, and we should cover the queries. So I believe you were expecting some Superman or Batman to come and take your class. Okay, so he would not be from Earth, he would be either from Krypton or Gotham. But I am from planet Earth, and I believe so are you. Okay, so we have a time restriction within which we have to complete it. So let us please respect that. So this revocation of cancellation, suppose on 1st of May, any registration is finally cancelled, and within 30 days, the taxpayer says, oh, I now need the registration, please revoke it. So there is an option he can apply for revocation. He can apply for revocation with an extension also, provided the commissioner allows for that. CMP 07 Garima is for separate thing. CMP 08 is for separate thing. Okay, go back and study. You will get the difference. Okay. Okay, CA Raguna Ticker is asking, what are difference between regular taxpayer and composition taxpayer? So regular taxpayer, he can avail input tax credit. He can pay tax. He has to pay tax at the full rate. Plus whatever tax he charges, the purchaser can avail the full input tax credit. No. Harish Krishan, it is not necessary to memorize the tables in GST returns. So Akhil is asking some details about the auto population of returns. Auto population of returns. Basically, see what happens is GSTR 1 that I file. So suppose I am supplying services to Hindustan Unilever, I am supplying services to Maruti, I am supplying services to Pepsi, I am supplying services to Nestle. So when I will report in my GSTR 1 that I supplied 10 lakh worth of services to Maruti, 10 lakh worth of services to Nestle, 10 lakh worth of services to HUL. So when I am reporting those outward supplies, I will report it invoice wise. That is where I will report the GSTIN of the recipient also. And basis this GSTR1, GSTR2A of the recipient will get auto-populated, wherein when HUL opens its GSTR2A, it will show Shashank has shown 10 lakh rupees of supplies in your name along with this much amount of tax. So one portion is this, that GSTR1 that any one person files, the other person gets the entire details in GSTR2A. Second of all, GSTR 3B is something which is majorly, there is very limited or nothing which is auto-populated, rather everything has to be entered manually. Okay. Okay, Sheetal is saying there is some issue with the screen. See, Sheetal, my internet connection is working fine. My system is the same that I was using yesterday. I believe due to technology, maybe there would be some issue and the technical team can take care of it. Thank you, Tejas. Thank you for the words of encouragement. The GSTR 3B input tax credit correction can be made for a month only. So see, Santosh, generally what happens is, so if you can identify the error in a month, you can do the correction for a month. if you identify a recurring error which has happened for multiple months, you can do an rectification for multiple months. Okay, so it all depends practically. Yes, Abhinav, GSTR 4 is annual. Nikita, I am not clear on this part whether second attempt persons will get RTP. Please check from the institute. Okay, Mayank is asking, sir, nil return shall be filed in GSTR 3B and for composition scheme CMP 08. Yes, my dear friend, you are absolutely right. Tabassum, your query, let me see. Sir, if money, Tabassum, can you please send it to me once? Just once, can you copy paste it? If something wrong, you can take directly. Sophia is asking if the employer provides food and beverage to its employees under statutory obligation. Yes, if it is under statutory obligation, Sophia, then ITC can be availed by that employer. Saikat Das. Yes, Mr. Saikat, we will take up numerical queries. Darshan, I've already informed about revocation, I've already discussed. Yes, Harikishan. Nutan, okay. So those who are saying practical questions and for specific value and everything, please be rest assured that the RTP that we will take up in the evening will cover more or less all the situations and will help you in multiple ways, I'm assuring you. So please bear with me till evening, okay? CMP 07 and CMP 08 is for different, okay? So Mayank says, so CMP 08 is basically a quarterly statement required for composition taxpayer to mention what is the tax payable by him, okay? And CMP 07 is when a person converts to regular scheme from composition scheme, okay? So they are both separate. Sanjay is asking, in case a person is changing to composition from regular scheme in April 2020. Okay. So I believe, Sanjay, if you go back and check, I believe in the middle of the year, you cannot change to composition. You can come out of composition and come to regular, but composition you have to avail prior to the commencement of financial year. Okay. Sure, Gunasekar, don't worry, I'll cover that. Can credit balance of ITC be withdrawn for daughter marriage? No, Rajesh, there is no such option. Welcome, Udita, Anmol, Akhil, thank you for the night. Hari Krishnan is asking, sir, a person fails to furnish GST returns by due date and later on applies for cancellation. Is he liable? Yes, of course. So, you have not filed your returns, you filed it late and you are also applying for cancellation. No rebate in late fee. You have to pay the late fee, the complete late fee. So Vignesh Rajan is asking, in 2021, someone obtained GST registration. His turnover was above 40 lakh. In the next year, it falls below. Like this year, this is the corona pandemic year. Big loss for businesses. Many will be falling below GST turnover limit. So can they opt for cancellation? Yes, they can surrender or opt for cancellation of GST registration for the present. Next year, when they again come under the taxable turnover limit, they can again obtain. Animesh, the contents of tax invoice, returns, e-way bills, see, more or less they are the same thing, only that tax invoice has 16 things, bill of supply may have 9 or 10 things. So, but you need to understand the essence, okay? And yes, I would say you need to remember. Welcome, Tarun. Nutan Gupta, when we are CA practitioners, okay, we already have an edge over GST practitioners. GST practitioners has more relevance for graduates, okay, and non-professionals. Latar, your query is not clear. Thank you, Akhil. Mohit is saying water includes in beverages. So Mohit, you can say yes, water is included in beverages. Saraswati, GSTR 4 and annual. What about any? So yes, for the time being, there is this dispute that because see, GSTR 4 was a quarterly return which has been made annual, but GSTR 9A is an annual return. Okay, so they both are separate. Okay, great. So Gunasekar is saying to utilize the time and tell how to approach the examination, how to present your answers. I think I'll just right away tell that. PPT Rajesh, I've shared it. Mayank, no ITC can be claimed through annual return. The only place where you can claim ITC is GSTR 3B, and hence 120% rule will apply for GSTR 3B only. Sakshi, aggregate turnover will only include the turnover on which tax has been paid. So, discount, when you say, I believe discount, yes, of course, will not form part of the turnover. Exam writing techniques, I'm coming to that. Let me just quickly see some more queries because we have time. So, let me first try and take up as many queries. Yes, Sujata, amendments in table 9 and 10. Saraswati, this I've already answered. Veera Lakshmi, thank you. Abhinandan, okay. Raghavendra, okay. Smriti, thank you. Shashank. Tabassum, can you please rewrite the query? I want to answer, but it has gone. So this query portal, when I try to answer, when I go up, it automatically comes down to the new queries because people are continuously punching queries. So if you can retype, I will be really eager to answer. Yes, Sanjay Kumar, ITC in credit ledger is forfeited on closure of business. Yes, Vrinda, the more you remember, the better. Akhil, your query is not clear. Thank you, Manoj. Adesh, 120% rule we had discussed yesterday, okay? Thank you, Binsi. Hari Krishan is asking if a person fails to furnish GST returns and later on applies for cancellation, he is liable to pay his output liability for the period covered in the return. Is he liable to pay interest? Yes, Hari Kishan. I mean, why are you asking these queries? If someone applies for cancellation and he has not filed return for prior periods, whether he will be liable to late fee, he delays payment of tax, will he be liable to interest? So tell me one thing. If such relaxation is given that anyone applies for cancellation, then don't charge late fee, don't charge interest. So every taxpayer will then do one thing, apply for registration, delay the payment of tax, delay the filing of return, and thereafter simply apply for cancellation and get a free, no late fee, no interest. Then again apply for registration, again delay the tax, again delay the return, and again claim an exception from interest or late fee. How is that possible? PMT09, Rupinder, is not relevant for your attempt. Okay? So that is why we are not discussing. Thank you, Aryan. Thank you, Sushmita. Prasad Pradeep is asking what is checksum. My dear friend, that is for internal GSTIN reference. That GST system internally uses that checksum which is there in the GST registration. It can be used for any number of purposes as per their internal requirement. Why are you worried about it? No, Akhil, you cannot do that. Okay. So I believe we have done quite a lot of queries. Except for Tabassum, she is not willing to retype. She wants me to go up and check and answer. So all other queries have been answered. So now, thank you, Smriti. Now, friends, let me tell you something about how to approach the examination. Okay. Friends, approaching the examination, I would like you to compare it with your favorite sport. So some of you may like football, some of you may like cricket, some of you may like something else. Now, one thing that I would like to highlight here is, have you seen how some players are very good otherwise? They have practiced very hard, they have worked very hard. But just due to not being in the right frame of mind, they are unable to perform sometimes. So first thing is, there is no alternative to hard work, no alternative to labor. Let me tell you, if someone is misguiding you that he took some shortcuts and he could clear the CA examinations, let me tell you, I've seen too many failures and I've never seen a success in CA exams because of any shortcuts. Shortcuts has only resulted in failures, never resulted in any success. And it's been almost 10 years since I've been a chartered accountant now. And I interact with professionals and everyone day in, day out. Second thing, what I'm talking about being in the right frame of mind. On your examination day, when you are about to approach the examination hall, one big mistake the students make is, they stand in groups outside the examination center and intentionally, unintentionally, they end up discussing, "Arey, तूने ये prepare किया क्या? Have you prepared this? Did you look into this? There is this amendment. There was this." Now, there is a person who has prepared 99% of course, 1%, obviously, it's a human factor, he could not cover. This person has prepared 50% of course, including the 1% he has left out. He puts up something from that 1%, this person starts to shake. He has not even gotten the question paper, not even entered the exam hall. Just because of that discussion with the friend, he suddenly starts losing his confidence. And before he enters the examination hall, he is completely out of his zone, and immediately on receiving the examination paper, his poor state of mind starts reflecting in his answer sheet. So my first suggestion, never enter into any discussion before entering the examination hall and after coming out of the examination hall. Before you enter the examination hall, if you discuss, something can go wrong, just get away from that. After coming out, you have back-to-back exams. And when you have back-to-back exams, someone says, "Did you attempt? Answer was this. What was your answer?" And your whatever was to be done has already been done. Why do you want to waste even a more minute discussing what happened? Can you go back and change that? No, you are already out. Directly head to your home, get a sleep, and get back to your studies for the next exam. Second important thing. In this 8 days of exam, so basically 8 papers, both groups, 16 days, 1 day leave. I see people will sit like anything 16 days, looking into the book, looking into the nothing. Sitting like anything in front of the book. Just take out 1 hour per day, half hour of some exercise, half hour of meditation. And I am guaranteeing this to you. I am guaranteeing this to you in my personal capacity. If your output is 100, it will immediately go to 150. Just go for a run, go for cycling, go for swimming, play some sport for half an hour, forget about your exam. For half an hour. And for half an hour, simply sit in silence, focus on your breath every day. Preferably just before you're about to leave for your examination hall. It will put you in the zone where you can completely focus on what is going to happen in the examination day. Another suggestion. Once you get the examination paper, and all of these are my personal suggestions. This is nothing that I'm doing. Institute has nothing to do with it. Since you've asked, I'm telling you what I did as a student, what worked for me, and what I would suggest any one as a well-wisher. When you get that examination paper, some students have this habit of reading the entire question paper. Now, if you know that entire thing very well, but for me, the bigger question is, what if you don't know 50% of it? If you don't know 50% of it, even before you've started answering, you've already started losing the battle. So my next suggestion is, look for the smallest question. You've seen when Sachin went out to bat, when MS Dhoni goes out to bat in cricket, when Virat goes out to bat, do they straight away go for 6? No. They first rotate the strike, they take 1s and 2s and they get into the mode of the match. And then they start hitting the big hits. I've seen people fail just because they took up the biggest question in the starting. 20 marks question, 16 marks question famous in accounts. Most of them don't get it correct. And then this is where they waste the entire 3 hours. Rather, pick up MCQs. First do that. Because these MCQs are quick marks. You know you've answered it correct. You've scored 1 marks, 2 marks, 3 marks. Before you know you've scored 10, 15 marks. Now only you have to go certain portion ahead and your confidence starts building. How do you do that? MCQs, of course, you have to do circling. Rest part of it, take up the sheet, right on top of it, I'm answering question number 5. Answer only question number 5, part A. Any part blank, strike it out. Move on to the next sheet. Answer question number 5B. Answer the relevant portion. Any blank sheet, strike it out. Another important thing, I'll see someone will answer question 5A, then question 5B. But when you are answering question 5B, why do you want to answer from here? Take it to the next page now. You're already wasting a lot of paper in your life. Why do you want to take that risk? Take it to the next page. Start from the smallest question and take up the biggest question at the last. Next important thing. 3 hours for exam, 100 marks. For 1 marks, you have 1.8 minutes. Take a watch with you. From this 1.8 minutes, you have to attribute time to reading a question. Read and reread. Because often people, when they read in a hurry, they miss out what the question is actually asking. What our Vice Chairman sir was pointing out yesterday. What he was pointing out yesterday. That you have to focus on what the question is asking you, not presume. People will read it briefly. Attribute a good time in understanding what the question is asking. Because then the answering becomes easy. Answer in a neat manner. Draw tables. Give reasoning. And never try to